Welcome to Tradespoon and for our weekly strategy roundtable. My name is Vlad Karpel. I'm CEO and founder of Tradespoon. And today we're going to have our weekly strategy roundtable discussion where we talk about current market conditions. This is my brief bio for those of you who are new. Disclosures are very important. Please read them. I'm going to go to specific trade ideas, so it's very important to read the disclosures. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. All right, let's take a look. Let's look at SPX in terms of where the market is going. We are at a very important level where we touched basically 200-day moving average, 5,700 level. There's a lot of position at 5,700. If you look at the Stock Forecast Toolbox, we're looking at the live trading room today, model still positive, even though momentum is deteriorating, right? So it used to be 3%, 2%, now it's only 1%. So model basically says in the next, 10 days, maybe we can get to 580 level, right? So about 3%, but average vector is 1%. So the momentum behind the bulls is deteriorating. You can see it in the price action of SPX, right? We have this consolidation for probably already almost 2 weeks. 1, 2, 3, 4, 5, 6, 7 sessions, right? So 7 sessions. We're kind of going nowhere, staying at 5,700, and there is a lot of positioning at 5,700, where that's kind of the next level that the market has to break above. So I'm looking at SPY. Let's just look at SPX. But if you're not familiar with the gamma exposure or options, I mean, think about this as a specific level, specific strike price where everybody buying puts and calls. And this is large position, right? If you look at the total gamma or total, notional value, we're talking about billions of, dollars worth of puts and calls, right, at these levels. So, and the dealers are forced, if we're below 5,700, dealers are forced to sell, to be gamma and market neutral. And if we get above 5,700, then they are forced to buy every time we approach 5,700. So 5,700 is the line in the sand. Next line in the sand is 5,800. If you zoom out, if I do 50 strikes, it's the 5,800 is the next line in the sand. But you can see market needs some kind of positive news to break above this level. We touched to it today. We got close to 5,700, right? 56.91 yesterday, the day before yesterday, and unable to break it. And it also corresponds to 200-day moving average. So for now, that's your over resistance. Model does see a breakout, potentially reaching 5,800. So let's take a look at interest rates. 10-year is stable around 430. So that's stable. Dollar oversold, but did jump above 100, actually to 101. So dollar continues to rebound. High yield going higher. High corporate bonds are going higher, and small caps broke through 200 level, right? Small caps did break through the 200 level. And SPX is approaching 5,600 right now. All right, so if you look at the SPX, and let's look at the May and June expiration. That's where most of the positions are right now. So let's do May and June expiration, May and June expiration. So basically, one standard deviation would be exactly that 5,800 level. Maybe 5,850, 5,900, but most positions 58. So scenario number one, we're breaking through 5,800 and approaching all-time high. That's scenario number one. Scenario number two, right, we're trading between, the main support is 5,500 or 5,450. So let's call it here, right? So that would be scenario number two. Right, we're trading between 5,800 and 5,500. And scenario number three, we break below last week low. Last week low was exactly at 545, and we're approaching 5,000 or most recent lows, 4,800. So those are the three scenarios to consider. Scenario number one, we are retesting all-time highs, getting to that 6,000. The next large position after 5,800 could act as a magnet is 6,000. So we either approaching 6,000 level, right? That's scenario number one. Scenario number two, kind of by distribution of probabilities, right? Going back to the bell-shaped distribution curve. Scenario number two is where 1 sigma, 70% of the time we stay in position two, and then three, we're going to 545. So how many of you say one? We're going to break through the 5,800 and we're going to retest 6,000. So that's scenario number one between now and June. Scenario number two, no, we're stuck in the range. There's still kind of, it's unclear. It's unclear, whether we're going to sign memorandum of understanding with China and European Union, right? So because it's still a lot of uncertainty surrounding the tariffs, employment is cooling off, and soft economic data pointing to slowdown in economy, potential recession. So because of that uncertainty, we're going to be stuck in the range two. And three, if you think we're going to have signs of recession, maybe unemployment ticks up, maybe CPI data next week ticks up significantly, then, or maybe escalation in tariffs, and then we're trading scenario three. Okay, so how many of you say 1, 2, and 3? Mark, 3. Okay. Mark said 3. We're going lower. Okay. By June. Anyone else? Fred, Brad, Michael, Steve, anyone? All right, scenario number, I'm going to go with scenario number 2. I think, there's a lot of uncertainty in the market, but I think all the negative news factor in, assuming there's no dislocation, right? We don't have escalation with China, right? Which I don't know how much more you can escalate with China, but there has been de-escalation, right? There's some exemptions that China did on US product. There's some exemption that US did on Chinese products. Trump is talking about lowering the tariffs for them. So assuming that rhetoric stays the same between now and June, I'm going to go with scenario 2, right? But if something negative happens, I agree, scenario 3 is very likely and probably will happen. I just don't think it's going to happen between now and the end of June. I think it's toward more of a second half of the this year, right? Maybe usually September or August has been very bearish months for the market. So sometime August, September, October, that's the time frame where I would be a lot more cautious on the current rally. Peter, welcome back. So I would go with the scenario. I'm going to go with scenario 2. Scenario 2 means that at 5,700, I trimmed a lot of position. At 5,800, I'm going to close even more positions, right? And at 5,800, I think my portfolio is going to actually turn negative. At 5,700, it's still positive, but a lot less than it was 2 weeks ago, right? I closed a lot of the positions. So any questions? To support my opinion, I mean, Bitcoin, right? Bitcoin has been a very good proxy for risk taking and overall market. It's not that far from all-time high, right? So if the Bitcoin is close to all-time high, that means risk on, right? People willing to take risk. You can see it reflected in prices of Copper prices, right? There's significant rally, kind of revisited the highs. You can see it in some of the individual stocks like General Electric, right? Kind of breaking out to all-time highs. Small caps are about broadening of the rally. That's another. So we're 200 was the initial breakdown after the Liberation Day, right? And we're trading above that level. So if we can stay a few more days above 200 level, that opens the door to 210, 215. And the broadening of the rally can also contribute to the rally, to the current rally. And the percentage of stocks above 50-day moving average, I mean, it's getting there to the overbought levels, but there's still a little bit more room to the upside. And so that would be support that at 580, but that's as good as it gets, right? 580, 585, because at those levels, we are overbought across the broader market, right? Any questions? How about 20-day moving average, percent above 20-day moving average? That's already kind of stolen, right? So you can see stocks that are already at all-time high, they're going to start stalling. Has hard time breaking through the 90 level. Okay. Any questions? All right, so how do we help at Tradespoon? We do have different models to help you determine these target gain and stop levels. You can see Spider's model turning bullish for the 10-day prediction. You can see the uptrend. So we think it's going to stay in this small uptrend. You know, at 577, consider going short. 562, consider going long today, right? If you're buying and selling, and you can see overall trend is positive. Potentially could get to 580, 590 level potentially, but likely scenario, you know, 570 and 580, as good as it gets, right? So this based on the close prices predicted going into the end of May, going into the Nvidia earnings, model basically sees we're not going to get much further than 580. If you zoom out, if you look at beyond 10-day predictions on the model, so it uses as an input, it trains on the data, and each data point is 1 month's worth of data. You also see kind of the same picture. You don't see a lot of momentum below 580 in the next 6 months. Right? So this is the argument like that Mark has made that, okay, we're trading scenario three. But scenario three, we just timing it very difficult, right? The model basically tells you, by October we could be at 580, but we could be 580 in May. But it sees that as of right now, there is not a lot of momentum to the upside. And at some point, second half of the year, we will revisit the lows. So I agree with the model. I think 580, I would not chase the rally. I would trim, and then if you don't be surprised if we get to 500, so meaning that at 570, 580, consider hedging, right? Consider hedging or trimming your long stock position or putting on, buying inverse ETFs like SH, buying put spread or puts on SPY, but hedge your portfolio, right? Because we're going to be in a trader market this year, right? So traders market, it's not, buy and forget it, right? Because if you buy right now, if we revisit 480, well, that's again, big drop, 10, 15, 20% drop. So that's how I would look at the market. All right, we have a lot more people today. You guys joining a little bit late, but thank you for joining nonetheless. Rick, thank you. Mark, Denis, welcome back. Happy Mother's Day for everybody who's celebrating Mother's Day this weekend. Rick, Peter, Mark, Denis, welcome back. All right, any questions? Since some of you or a lot of you joined a little bit later, did you guys have difficulty joining, or just, everybody's getting ready for Mother's Day? Okay, just let me know. But basically what I covered is, got busy, Rick, no problem. No problem. Okay, so I'll do a quick recap before I get into the tools, Tradespoon tools. But I'm bullish. Mark is bearish. I'm not bullish, I'm neutral, right? I'm basically saying, looking at the position level, we're going to have hard time breaking through 5,700 and 5,800. So at the current level, 5,700, you can already see that the rally is stalling, right, for the past 2 weeks. It needs a bullish catalyst to break above 200-day moving average, at least get to 5,800. I mean, that could be, signing with Japan over the weekend, with, European Union, maybe a negotiation with China is going to, continue to de-escalate. So totally possible to get to 5,800, but then there's a call wall. A lot of people refer to these walls as call walls, right? Meaning that the dealers are forced to sell the stock to be neutral. So either 5,700 or 5,800, market is going to have a hard time breaking through this unless huge positive catalyst. Maybe NVIDIA is going to hit a home run in the next 2 weeks on their earnings call. Maybe memorandum of understanding is going to be signed with China. Those black swan events, or Russia-Ukraine signs a peace agreement, all those events could push the market higher. But if we don't have any big events, then, at 5,700, 5,800, this is where you want to consider going short, or at least trimming your exposure to longs. You can see that in terms of short-term prediction, model basically shows we're still in uptrend, short-term prediction, but long-term prediction, if you zoom out to 6 months, basically it does see 562. Right, 562 is overhead resistance. I mean, you could get to 585, so model does see 585, 590, but this is outliers, right? More likely than not, it's the highest print I see is 575, right, in the next few months. So between now and the end of the year, or at least October, between now and October, I would be surprised if we see anything above 585, 590, right? So, and that's so that means you need to, that's 570, 580, maybe it makes sense to start trimming. 30 years of Bob Pisani is retiring. Wow, that's awesome. That's cool. Soon will be shortage of product. Yes, the soft data does point to, the soft economic data, all the surveys, the sentiments, they're pointing that the companies don't want to spend the money. They're concerned, they don't know what to do. So you could see it on the main street across the board. You just don't see it in the hard data, right? If you hear if you're listening to Powell's speech, you don't see it in the hard data. And there is a high risk, he said, there's the risk of higher inflation and the risks of higher unemployment continue to elevate because of the uncertainty. So if things don't change and we keep the 10% tariff across the board, then I agree with Mark, at some point prices will start rising. It could be in the months of June reading, it could be in July reading, it could be next week. That I don't know, right? That's hard to predict. Like when I go and buy eggs, I know that the prices are high. But when I'm trying to rent an apartment in Florida, I see the prices are going lower, right? So since the CPI data is the combination of, dwelling, consumer prices, volatility of energy prices, right? It's very hard to predict, right? Because if your rent is 30% less, but your prices of eggs are 30% more, maybe that net that's positive, right? So since I'm not an economist, it's hard for me to say, well, inflation is going to tick up in next week. I have no idea, right? Overall, I don't know. I do know that the longer we have 10% tariffs or 20% tariff across all countries, the longer that process, the longer that, the shipments are, if you go to West Coast or East Coast ports, there are no, shipments from China are down, I don't know what the number, 50% right now, 60, some staggering number, right? We're back to like it was in COVID, where just there's no shipments from China. If that is prolonged, right? If that exposure is prolonged, then obviously inflation pressure on the consumer goods, which are volatile, going to go up. But maybe inflation, because the oil prices is down and dwelling is down, then overall CPI number could still continue to go lower, right? So it's very hard to make a correlation between these inflationary pressures and the stock market, right? So, but probability, every time we still have this uncertainty about tariffs, Powell is going to keep saying that probability uncertainty keep rising, but he's waiting for the hard data, right? And when the hard data is going to hit, I don't know. It could be June, it could be September, it could be August. That I don't know. So how do we help on Tradespoon? We do have these models, Stock Forecast Toolbox. You can enter, NVIDIA, Coinbase, ETFs, even some of the futures data you can enter and get the predictions. If you want to see what I trade, it's Elite Circle, right? So every day, right, we have a live trading room, morning bell and closing bell. We have the recordings. So you don't trade alone. Here's an example of where I'm risking, I put on a option trade for 85 cents and I close it for $1.15, right? So about 50% profit actually in one day. But not only options, I trade stocks. So I try to give both examples. Conservative strategies like Microsoft, it's a conservative strategy, right? I bought a stock and I bought an option spread, right? Both, I'm not going to make, 50 or 100% return, but it's 20. The target is on options 20 to 30%. Microsoft maybe, 5 to 10% profit. So that's an example of stock trading and option trade. I do earnings trade where I try to show these, significant returns, whether it's 50% or triple digit returns, using options, right? Especially around earnings or around any events. This is where, by structuring trade as a calendar spread, which is in this example, right? Coinbase, I bought 240 call that expires today and sold that expires today, and bought the one that expires next Friday. And then I already closed it the same day because it was up 50%. But Coinbase continues to go higher. So some people are holding it. So it could get, it could get there. But, at this point, I closed the position. So it's a combination of stock and option trades. You can enter phone. So you get text messages. This is sync with my broker deal. So you get instantaneous messages real time, right? You get email when the trade occurs. You get SMS message when the trade occurs. And then you have a morning bell and closing bell. So you can watch it live. If you need more than live trading room, Elite Circle, we do have one-on-one coaching program. So we have great coaches that's been managing and money and coaching for decades. So you can always click on one-on-one coaching and sign up for coaching program. If you have time, if you want to invest time and money, right? This is one-on-one coaching obviously requires financial commitment, not only time commitment. But if you're managing larger size portfolio, $10,000, more than $10,000, I think it makes sense to invest into coaching. So you're mitigating some of the risk, and somebody who's been through global financial crisis or who has been through COVID trading can help you deal with the current market volatility. So I would consider that as well. So that's exposure to our trades. If you just want research, in addition to Stock Forecast Toolbox, every day we publish picks, right? Active Trader for aggressive trading. So the model runs every day and gives you signals. Weekly Trader and Monthly Trader, this is long-term trading, holding position a couple of weeks, you're holding position a couple of months. Those signals are generated on Sunday and they're published on Sunday. So for Active Trader today, let's see, what was the signal? General Electric, right? General Electric, Oracle. Those are some of the stocks that are in uptrend that you can potentially consider trading. And let's say General Electric, if you want to enter, right, you have a choice. If the market is down, then you might want to wait for 207. If the market is not down, pre-market futures, then sorry about that, 214, right? You could buy 214, and then you're looking for 1% gain, right, or 1% stop loss, right? 207, 1% is $2, so 205.69 for short-term trading. You can adjust for beta, you can adjust for higher volatility, but that would be the approach. All right, any questions? Because it's 11 o'clock, I do have to go. You can always join us on Monday for live trading room, again, coaching program. Send us an email if you still have more questions, but that's all I wanted to cover today, just general market conditions, and answer any questions you have about these subscriptions. Right. So Elite Circle, you have exposure to everything and trades, right? You can trade along. If you just want tools, Stock Forecast Toolbox and Picks, we do have tools membership where you can get access to our tools, but then you would have to make a decision when to enter or when to exit positions. All right, guys, that's all I have for today. Thank you very much. Mark, Denis, Kevin, Peter, Rick, John, Steve, thank you very much, and have a great weekend. Happy Mother's Day. And I will see you guys hopefully on Monday in the live trading room. Again, consider one-on-one coaching. I think this is great, especially in this volatile environment. And I will see you soon.